Fed Chair Jay Powell is out with some comments on the economy. This happened just moments ago, and our Steve Liesman joins us right now with more. Steve.
Becky, thank you. Fed Chair Jay Powell, in testimony before Congress today, will maintain his views on the economy, policy, and tariffs in his press conference last week, saying the Fed is well positioned to learn more about the course of the economy before adjusting policy. The Fed, he says, needs to prevent a one-time price increase from tariffs from becoming ongoing inflation, very much using the language he used in his introductory remarks before the press conference on Wednesday. Tariff effects, he opines, could be short-lived, or they could create more persistent inflation. Tariff increases this year will likely push up prices and weigh on economic activity. They're driving near-term inflation expectations higher. Long-term expectations remain consistent with the Fed's 2% inflation goal. The Fed's obligation, keeping long-term inflation expectations well anchored. Inflation has come down a great deal, he says, but they're still somewhat above the 2% goal. The economy is solid despite the elevated levels of uncertainty out there from policy. Labor market is near the maximum employment level. Policy changes continue to evolve. Economic effects, he says, are uncertain. So, guys, if you thought or hoped he might concede or take a step towards some of his colleagues on the committee that are talking about a July rate cut, I do not see that in these remarks today. He's very much maintaining his I could go either way depending upon the data view that came out last Wednesday. Becky?
Steve, it sounded to me, based on those headlines, that it's more than I could even go either way. He seems to be signaling this is not happening anytime soon because I agree with the president. The economy's in great shape, so maybe it's not necessary. And he thinks that he has to make sure that he focuses on the inflation side of the mandate at this point, which he says you don't want a one-time inflation gain to turn into longer-term inflation. So he's very worried and focused on that. It just sounds to me like he's focused entirely on inflation and the potential for inflation to show up.
I think that's right. The question you might ask yourself, though, Becky, is what happens if we get a June inflation report, which I believe comes around the middle of July or so, July 11th, which is benign again. If that happens again, I think it's going to be a little harder to hold his committee in line and perhaps for him to maintain his position that we're going to get higher inflation. You see that he's very insistent that there will be price effects on from tariffs. So there's two questions. The extent to which they are offset, you do have some declining service inflation. That's good. Some of the housing numbers have been better. Some of the non-housing core numbers have been good as well. But you do have this uptick in goods prices. It's not like there wasn't a tariff effect in the May numbers. It's that they were, first of all, they were modest. You could see them in there, but they were also offset by other issues. So what's going to happen with oil prices? They seem to be pretty well controlled. That's a very important development for the Fed and for inflation when it comes to the effect of the military action in the Middle East. But the question becomes, if July comes in benign again, does the chair maintain all of these positions he has when it comes to the outlook for tariffs and monetary policy?